JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 30th of April 2021. So yep guys, another month has passed. So it seems like it was just the 1st of April, but there we go. 30th of April, the last trading day of this week, the last trading day of this month. So yeah guys, before we jump into the charts, our usual stuff, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here at jfdbank.com and click on the research tab right there on the top, guys. Now, jumping into the charts, the first one I want to pick up here is Nikkei 225. The index drifted lower and it closed in slightly in the red for the week again, and that has been the 4th week in a row. I mean, we're not seeing huge declines here, but nevertheless, it has been another week and another red week, negative week. So yep, basically for now, what I'm going to do here is I'm just going to continue monitoring this one carefully. As I've mentioned to you guys previously when I was covering Nikkei, I said that even if we see a bit of a decline here again, if this whole area once again provides good support, this upside support line together with the 100-day EMA and this 28,326 territory, then yes, we might see a nice rebound here and a push back up, or it may not even travel here. It can instead push higher and overcome the 21-day EMA, and if it does that, then yes, I'll aim for this downside resistance line taken from the high of the 16th of February, which could provide initially a bit of a resistance. Now, in terms of the overall picture, of course, we need to be very careful, and because we can see that the index seems to be kind of getting into a bit of a squeeze here. Now, also, what's interesting here, and again, as you probably know me already, I mean, I do like to sometimes get ahead of myself here a little bit, but basically just wanted to kind of show you what I'm talking about here. So, if we ignored this upside line, basically, we could potentially maybe see this index forming a possible kind of descending triangle here. And let me just quickly grab this highlighter here. So basically, something like this here could be possible, and in a way, if the index continues to move sideways here for quite a while, but below the this downside line and continues to respect the support zone, then yes, of course, something like this could be possible. Where yep, a bit of a descending triangle could be forming here. But again, that's again me getting ahead of myself here. For now, we're just going from what we have, and yeah, we have an upside support line which continues to kind of provide support, and we have a downside line which continues to provide resistance, which means that we are kind of stuck here for now. Now, Shanghai Composite, haven't looked at this one for a few days, but or actually 1 day. But basically, what I said to you previously, that be careful of a possible here rising channel here, which also could be considered as maybe a bearish flag here. Now again, it's we have the prevailing trend here to the downside, and then we before entering the this little kind of channel, and if it starts breaking the lower side of the channel here and drops below somewhere below this 3,373 territory, and at the same time it could drop below the 200-day EMA and more sellers could join in, guys. So basically, long story short, again, on one hand, we have ourselves still a rising channel pattern. On the other hand, we could see maybe a bit of a bearish flag here, but again, the same story as with, for example, when I recently mentioned a falling wedge, to which I'll actually get into a while in a while. And here, the same story. And as long as the boundaries remain intact here, we cannot really, let's say, get comfortable with that kind of downside scenario. And in fact, I mean, in general, if this is just seen as a good area of support and continues to be as a good area of support, I mean, this 200-day EMA, then well, we could see just another rally here and a push higher. But at the moment, it is how it is, guys. I mean, from the very, very short-term perspective, yes, we have ourselves a bit of a kind of a rising channel here, or even more from even a more shorter-term perspective. What you could do here is keep your eyes on this one, because we could be seeing here maybe an ascending triangle pattern here, and with the upper boundary here being this 3,496 territory, which I'm still waiting for a break off in order to get a little bit more comfortable with higher levels. But if we're not really gonna get that, then yes, then well, I mean, we'll continue monitoring this range overall. So there is a lot to think about here. There is a lot to consider. I know it's maybe too much here. I mean, it's might be confusing here a little bit, but probably if we put it all into kind of sequence, I would say, then first of all, keep your eyes on the little kind of triangle pattern here, this little ascending triangle. If the lower side of it continues to hold, yep, we might see a reversal here, push higher, but still we would need to see a break of this barrier, the 3,496 territory. If the lower side of the triangle gets violated and the index drifts lower, then you keep an eye on this rising channel pattern, where if the lower side of the channel holds, we might see then, yes, a nice rebound and a push higher. But if that fails, then of course, yes, well, we're looking at then possible lower levels here, especially if it drops below the 200-day EMA. So be very cautious with that, and of course, now we'll wait probably for next week. Yes, the index is still open, but yeah, of course, let's see how this is going to play out today. But somehow I think that this is where it's going to end up being. Now the German DAX, and here, let me just, so yesterday of course we had a decline, but it was a bit of a roller coaster ride. So Europe yesterday closed in the red, but yeah, the US managed to recover and push higher. But here basically we saw the index breaking this upside line, and most importantly, initially it fell below this hurdle, the one that I talked about yesterday. Let me just, oh, no, this one, sorry. Oh, there we go. So we dropped initially below this 15,150 territory, but as you can see, the bulls managed to push the index back above it, and looking at the cash index right now, we're still kind of hanging above this hurdle. So not far away, but still above this. So in a way, there is still a chance for a further continuation move lower here. And looking at this picture, I mean, well, it is painting a bit of a negative one, but yeah, I'll probably still stick to this 15,150 territory. If we see a drop below this, then yes, I'll aim lower. But if the index If the index stays above this area, then, well, I mean, maybe we're not really done with the upside here yet. So maybe we could see another push higher later on. So keep that in mind, guys. For now, let's keep an eye on this 15,150 territory. If that gets cleared again, then my next target is the 15,072 mark, which is the lowest point of last week. But if that gets cleared, well, I mean, this is where it could become very interesting for more sellers. DXY, very quickly on this one, so continues to drift lower below this downside line taken from the high of the 31st of March, and as I said before, that as long as this downside line continues to provide resistance, then yes, we will aim for further declines. For now, yes, everything's kind of looking quite interesting, and as I said before, that I'm still aiming for this upside support line. But to be honest now, given how everything is kind of shaping up here, I would probably stay careful because maybe we're not even going to reach this area and we'll start pushing higher straight away. But again, that's still, don't get me wrong, that's my secondary option. My first option is of course a possible test of this upside line. So probably I'll leave it for this one for here. Just want to see how this is going to finish off the week, and then we'll have a fresh new look on DXY on sorry, not on Monday, on sorry, yes, on Monday. Yes, confused. Tuesday there we won't have any traders espresso nor tea time, but on Monday we will do. So yeah, we'll have a look at this one on Monday, and we'll see what we can do with the DXY. But the most important is, of course, to keep an eye on it today, and to see if we actually gonna violate and stay above this downside line or not. Now gold. Gold is a bit of a tricky one here. So yesterday it drifted lower and fell. At one point fell below the 1760 territory, kind of indicating that it wants to travel further south. But as you can see, it was just a false breakout, and that's why I always say to you guys, wait for that daily candle to finish. I mean, because now we're still trading above this 1760 zone. We're still above this downside line. So in a way, I'm still gonna stick to the neutrality at the moment, because again, for me to consider the upside, I would like to see a push above the 1798 territory right here. For the downside, yes. Now, actually, for the downside, now I'm going to keep an eye on the 1760 territory, but I'm also going to keep an eye on this downside line. But I understand that this is a bit of a tricky moment here because we've kind of already moved a little bit more to the right. I'll keep that for now. I mean, I want to just see how this is going to play out. But at the moment, let's put it this way: there is a chance for a rebound as long as the price kind of stays above the 1760 mark. However, as I said to you, my preferred barrier after a break of which I could go for higher levels is the 1798 zone. Jumping into Ripple. Looking at this beautiful move here this morning, and as you can see, yes, we are pushing nicely to the upside here again, and we've managed to clear this this 1.4634 territory, and yes, for now, guys, looking at all this, everything's kind of, this whole thing is painting a nice positive picture here. This move, I mean. If, of course, if this crypto is able to remain above this hurdle today, then we're not going to consider this, of course, as a false breakout, and just we'll see a nice continuation move higher. So basically, long story short, what I said to you recently as well, that maybe this is forming a possible bullish flag here, which, as you can see, it did. And yep, we saw this crypto pushing further north here. So for now, long story short, there is a good chance for this one to move towards the 1.57 territory, or we could go further north towards, if we clear that level, we could go for the 1.9657 mark right here, and then we could take it from there, guys. Now, Litecoin, also looking quite positive, but it hasn't really broken this 266.74 level, the one that I mentioned previously. I need that break in order to go for some higher levels, guys. So, yep, for now, long story short, I'm being very careful here, and it seems that it's very interesting that Ripple is ripping to the upside, but Litecoin is kind of stuck here. And well, maybe it will come for it, because sometimes we understand what we recently understood is that some of the cryptos might be a bit of a laggards, and yep, they might just kind of pick up on the let's say the let's for example, a positive move higher later on. Let's say it doesn't really sometimes work. They don't really sometimes go hand in hand with each other, like with the same, let's say, the same strength. But yeah, well, that's normal actually. So let's see how the Litecoin is going to play out. But for me, I would prefer to wait for that push above the 266.74 territory right here, marked by the current highest point of this week. Okay, now jumping into a few pairs, and this is what I was referring to in terms of the falling wedge pattern. And look at this beautiful picture here. I mean, everything worked out nicely. In the beginning of this week, I told you to keep an eye on this this falling wedge, and of course, as I said, that these patterns tend to be bullish indications. However, they can be bullish indications if they break the upper side of the falling wedge. Until it's trading inside that, well, I mean, it's still to the downside. It still could be moving lower. We did get some data today from Australia, so then yeah, I mean, there is a bit of an improvement. So we can see there's positivity kicking in. But overall, for now, we can see that yes, it found good support near the 200-day EMA. Let's keep an eye on this little hurdle, the one that I mentioned as a possible support area, and this 1.0743 territory. Now, let's see if it's not going to actually become a resistance barrier, and if it provides resistance, then yes, another slide could be possible. But if it starts getting, I mean, if it breaks here and we see a further push north, then we'll be very careful near this upper side of the falling wedge, which if gets violated, then of course could open the door towards higher levels. But at the moment, guys, don't get me wrong, this falling wedge could continue drifting lower, I mean further, and that's why it could be frustrating, although maybe we all know that this could potentially break out to the upside. But yeah, and as long as it remains inside the wedge, be very careful with the upside. USD JPY, very quickly on this. So now, look at this perfect test. Now, this is what I talked about with you guys this week, and after we broke that level, I mean, which yesterday I've kind of amended it a little bit, but after we broke that barrier near the 108.33, I think it was something like that. But yeah, we broke that area, and we pushed further north, and what I said that my next target is the 109.23, and boom. Beautiful test of this area, and yep, now we're seeing a bit of a corrective move lower. However, it still remains above the 21-day EMA, so there is still a chance for this one to push higher. And but now looking at this, let's be on the careful side, guys, and let's go slowly, step by step, to the upside. And for now, if you want to go for the upside, yes, wait for a push above the 109.23 territory right here, and then yes, higher levels could be met. But again, I will be very careful, and that's why I removed that level. What I'm going to be aiming here for is this one right here, the 109.96. And then this is the high from the 9th of April, and then we'll take it from there. For the downside, I would need to see a drop back below the 108.43 territory, somewhere around here, and then a move towards the 107.55 territory could be possible. GBP Aussie, quick update on this one, and here what I need to do is first of all get rid of all the drawings and start kind of fresh here. And what I'll mention is that basically, and you probably see it yourselves already, that we have a bit of a squeeze here happening, and we're stuck basically between these two lines, and which means that the best option here for now is to wait for a violation of one of these sides before, let's say, considering the next short-term directional move. At the moment, we're, like I said, you can see that yesterday we had an attempt to break that. Yes, we broke the upper side of this little kind of triangle, or should I say this downside line, and but we failed to stay above it and we drifted back down. And we're currently trading below these EMAs, the 21-day and the 100-day EMA. And as long as we stay below it, then there is a chance for this pair to drift lower. However, if it suddenly starts climbing back above these two EMAs, then, well, be careful. Maybe we'll get a nice pop here above this downside line. So keep that in mind. A quick update on EURUSD. I'm not going to spend too much time on this one, but just basically wanted to share with you that this week, I said in the beginning of this week, I said that watch this level, and if that gets cleared, my next target is the 131.9, or actually the 132 zones here. So well, you can see that we managed to kind of reach that area. And now we're kind of retracing a little bit lower. So I'll keep this pair, to be honest. I want to see how this day is going to end and where this pair is going to end up being, and then I'll pick up on this one next week. Can see a request from Evu for WTI oil. Let me just quickly finish off with EURUSD, and I'll just jump into the WTI oil. So here, basically with EURUSD the pair is still kind of trading above this upside line, although we're seeing a bit of a decline. From the kind of negative side, the fact that we formed a doji here, that's not really working well here for the bulls. Basically that could be seen as a nice reversal signal. Well, I mean, if so, then let's still be very careful, because in order to probably maybe go for slightly lower levels, well, I would need to see a nice good drop below the crossroads here of these two lines here, the upside one and the downside one. So, and then yes, we could go for lower, maybe slightly lower levels. At the moment, we're still trading above this upside line, so be very careful with that, guys. And yes, we are showing some weakness right now, but if this is going to end up holding eventually, then, well, maybe we're not really done here with the upside. And quickly, as promised, the WTI oil one here. So let me just capture this one. So WTI oil, and yeah, so we managed to clear this. So what I talked about in the beginning of this week, basically what I said to you, keep your eyes on this highlighted territory, and yep, boom, we managed to clear that, and we managed to rise nicely further north. So beautiful move here, good. However, now looking at this picture, I mean, we're seeing a bit of a corrective move lower here. Now, even if it starts drifting further south and starts correcting all the way here towards this 63.80 territory, then if it somehow remains kind of, let's say, or should I say continues to hold, then yep, a nice rebound here could be possible. This could be maybe going into next week. Another thing as well is to keep in mind that even if we drift further south here, then keep your eyes on this upside support line. I mean, and in a way, it also could provide support. And if you're really careful and cautious, I mean, you could probably wait for a violation of this upside line and then go for lower levels if you're looking for something more of a medium term. But from the short term perspective, yes, there is a chance to drift lower. Be very careful, guys, still, because in a way, we're not really done with the upside here, as long as the price stays above this 63.80 territory. And then, of course, yeah, something to keep in mind as well for later on. This is where I'm going to overcomplicate things again, a rising wedge pattern. Well, that's something for later on, but yeah, for now, let's ignore this. For now, I'm still aiming for the upside here, But again, looking at this current weakness, I want to see where it's going to find support, or if it's going to find support. But if it starts dropping below the 63.80 zone here, we might see a bit of a larger correction towards this upside line, and then we would take it from there, guys. But I'll pick up on this one next week on Monday. So thank you very much, guys, for watching and listening. I really appreciate your views, your likes, your comments, guys. I really do. That means a lot to me. So I hope you're going to have a fantastic trading day today. If join me later on in my traders tea time is always 12:30 GMT. If you're not going to join me then well, have a fantastic weekend, everyone. So thank you very much, and bye for now.